No worries, good to speak.
Now, I have the pleasure, and I do mean the pleasure, of talking to Nick Chaplin, who works at the NAB. He leads the listed origination. He leads that part of the business, and Nick has been at a seminar with me this week, and he's the sort of guy that you want to have as an expert on hybrids. And then we'll be joined by David Lane, who's an advisor for Pitcher Partners up in Brisbane, and he'll talk to us about, if you like, how an investor would look at it. So Nick is on one side. He's the guy that originates. He's the guy that talks to the customer and says, you know, we can get you some money if you create this security, which is a hybrid. Now, Nick, you've been doing it for a few years. They have been criticised as poorly sold, misunderstood, so on and so forth. What's been happening of late in terms of the critics now for the hybrid space?
Well, I think we're seeing, Mark, the critics were coming on board. So, you know, one of the conversations at the seminar this week was with one previous critic that's now come around, given the value that's available in the product. And, you know, since late last year, the issues we've seen for AMP, CBA, Westpac and indeed NAB have all come on with very good premiums. And, you know, that's a good... It's as good as advert for the performance of these instruments as you're going to get. So,
before I go to David, but when you say come on at premium, you mean that the people buy them for $100 and they might be trading at $100.90 or 102, 103, that sort of stuff? Exactly right, and that's what's happened with those four instruments, certainly since they listed on the ASX. Okay, so over the course of the night, we're going to talk about why that might happen. David, welcome. I hope you're doing well up there in sunny Queensland. How do you... Beautiful. Good. How do you think about the hybrid securities? Do you think of them as fixed income? Do you think of them as equity? Or are you starting to see, because of the size of the issuance, $40 billion, that they are no unique asset class, that they are not one or the other, they are just hybrids? How do you see it?
Yeah, well, I guess the name says it all, that the reason they are called hybrids is that they have some characteristics of debt and some characteristics of equity. When we're looking at an asset allocation for a client, we will put them in the listed fixed interest space. But then we'll actually split those out into the listed income securities, which are those that act more like debt, and then the listed hybrids, which are the ones that, particularly the Basel III type of issues that have been issued by the banks in the last 2 years. They generally act a little bit more like equity. They have franking credits attached to them, so investors within self-managed super funds get the benefit of those franking credits. Yep. And there is a little bit more volatility than you would normally expect from a fixed interest.
Okay, we have a few minutes before we go to a break, but tell me about the volatility in the Brexit period. Can I start with you first, David, and then go to Nick on the same question? How did you perceive the volatility, and what did it mean to you when you were watching? What did it say to you?
Well, surprisingly, we were quite encouraged by the performance of the hybrids through that period. We saw the equity markets sell off dramatically as a knee-jerk reaction, and then recover quickly. There was some action in the hybrids on the sell down, but not where near the extent that we saw back in February and March of this year. So we're actually quite encouraged by the way that hybrids performed, and are starting to perform a little bit more like your traditional fixed interest investment.
Nick, when I think about it in terms of that volatility, normally you say it's only retail, there's not much volume, they can't get out, that sort of stuff. In the context of volatility, who's buying these assets now, and what do you think is happening in terms of the performance?
Well, we are seeing they are less liquid than equities, and that's natural because they are treated as fixed interest. I think there's another way to view these things. If you're viewing them as equity, they're not really for the portfolio, because that's a bad news scenario for them. But I think the buyers are actually, they're sophisticated buyers. They're probably 10% of the holders of the total volume of each issue are probably willing to trade it. And that is probably as high as you want that percentage to go. These are instruments that should be longer term investments in the portfolio, and something that's not really there to be traded on a day-to-day basis, like the proportion there in equities would be a lot higher. So it's the same guys that buy it, but only that small proportion of people that choose to trade the instrument.
We have about 30 seconds to be very quick. I'm going to ask you, Nick, about the ANZ trade, because that's where institutions, there has been institutional buying of hybrids, But can you give everyone an example of the ANZ trade, how much they issued and how many bids there were, and then we'll go to a quick break.
So this is the US deal that they did offshore.
Yeah.
So effectively the volume that they got done was 1.3 billion Australian dollars in US terms, and that was bought entirely by institutional investors. Quite a lot of them were based in the US, quite a lot of them were based in Asia.
And that's now trading about 106. We are going to take a very short break. We'll talk a little bit more about hybrids, but so stay with us. We'll talk to you soon.
It takes a lot to create new life. Elevit has more folic acid